Technical analysis is fundamental analysis. So, this is a topic that has been beaten to death, honestly, on forums and Twitter and whatnot. And we still have come to an inconclusive end to that argument. Now, this video was originally going to be named Technical Analysis is Real. But the more I thought about it, the more I realized that technical analysis really is just a subset of fundamental analysis. And so I'm going to, first I will try to explain why technical analysis works at least empirically or anecdotally. And then I will kind of move into the discussion on why I think it is a subset of fundamental analysis. So let's talk about the empirical aspect first. TA works because it works is what a lot of people say, and that is kind of true. So we'll go from that perspective. A lot of people have made their livelihoods off of trading and off of using TA and off of using these techniques, whether they are the famous Bollinger Bands, for example. Those are really big. Or EMAs, or let's say horizontal support and resistance levels, even a lot of people use. And a lot of people have gotten big have made their money using these very simple techniques. And so let's say TA is completely fake and the markets always operate completely randomly or only based on a fundamental perspective and have nothing to do with TA. You would expect that over time, that if you were a TA trader and you base all of your trades off of TA, your win rate would be something like 50-50, or you would probably even lose money because the market takes their fees. So even in that case, if TA is fake, if TA is not real, if TA doesn't exist, then how are people who only trade with TA and who look not like zero at fundamentals? There's people I know in crypto who trade only Bitcoin, or they trade only Ethereum, for example, or only EOS or whatever coin, just because of the TA and just because of the chart and because they like the nice returns. They're not really trading it because they fundamentally care about what Ethereum is doing. They don't really care about smart contracts. They don't really care about crypto or blockchain. A lot of traders do that. They will just trade the charts. They will only trade the charts. And it can be very attractive for them to trade crypto, especially and particularly because of the returns associated with it, because of the volatility, because if you are good at TA, this is what they say, if you are good at TA, you can make a lot of money. And so these TA traders, they make a lot of money. They make a lot of money in bull markets. They make a lot of money in bear markets. And so if TA was not real, if TA was fake, if TA was false, you would expect these only TA traders to either be at 50-50 win-loss or at zero. Lost all their money because TA obviously is not real in that case, right? But that's not the case. There's a lot of traders who only trade with TA, who only trade this way. And most of the famous or big crypto Twitter accounts are almost always looking at TA. I'm more on the fundamental aspect, kind of looking at why coins are going to perform. But a lot of other traders. So for example, I really don't use TA. Very, very much at all. I use horizontal support and resistance, which is the most basic form of TA, which is what most other traders that I know who are successful use. But most of the traders on crypto Twitter, so we're talking about Crypto Cred, who, by the way, plug for Crypto Cred. He wrote an excellent article on why technical analysis works, and his perspective was a little bit different than mine. He basically was positing that technical analysis is not really a tool used to predict for future price predictions as much as it is a tool just to give you an idea for actionable trades, which I think is a pretty neat concept. I disagree. I actually do think TA is useful for future price predictions, but it's a good article anyway. Go search it. I think it's a Medium article. Just search for Crypto Cred. So people like Crypto Cred, people like Luke, Venture Coinist, people like, oh God, not Trader Dante. He just memes. People like, let's say, CryptoPath did a lot of this. LoomDart does a lot of this, even with his famous Loom lines that I still have absolutely no idea how they work. God bless you, Loom. These traders are some of the most popular traders on Twitter, and they are only technical analysis traders. Now, that's not to say that that's the only thing that they do. So I suppose I'll take that back. They're not only technical analysis traders. They trade the fundamentals, but they're mostly well known for their technical analysis. They're mostly well known for that. And so it's clearly these are people who have gotten a large amount of success trading the markets and being in the markets as long as they have, doing TA. Crypto Cred, for example, I don't think he has a paid group. I don't think he has lessons or courses. I don't think he has anything. I think he gives out all of his information for free. Don Alt, same thing. Everything's for free. They're not really making any money. So if they're not making money that way, how are they making their money? They're doing it trading. How are they trading bull and bear markets? They're doing it using TA. So clearly, empirically, at least in this case, TA is something that works, or at least works for them. So TA in that perspective empirically works. People make money. There's traders who have money. TA works in that case. It doesn't have to be real for it to work empirically, but we know it works. We know that at least it drives results. So what else? Algos. So this is another little point. Algos, market algos, and the people who design them, they're called quants. The question is, what data is a quant, an algo developer, using in order to make actionable trades on the market? Well, there's sometimes they're looking at fundamentals. That's true, but that's not really what they're designing in most cases. In most cases, these are software programs that run on the trading, on, let's say, the New York Stock Exchange, or on trading accounts, so on and so forth, or crypto accounts, crypto exchanges. So they're using data that they're deriving from the exchanges, and these algos kind of have to run by themselves. They really can't run with human intervention. And AI is at such a level that you can't really make an AI currently to date that looks at fundamentals, whatever that means, right? So really what they're looking at most often, the inputs that an algo bot is using is going to be EMAs, it's going to be horizontal support and resistance, it's going to be price action, it's going to be numbers that can actually be programmed into these algorithms in order to create a desired result, create an actionable trade, creating profit. Numerai is a famous example. One of the crypto projects, they do basically developer competitions of who can create the best algo and who can generate the most money, and they're decently successful at what they do. And then obviously, I don't really know the numbers of this, but I would venture to say that over 90% of trading and high frequency trading and so on and so forth on the markets is algos and bots, even in the New York Stock Exchange, etc. These are mostly algos and bots. So these algos and bots are all deriving their data from something, and they're all deriving their data from the charts themselves in most cases, because they have to run by themselves. They have to run 24/7 in order to generate their profit. So algos clearly use TA. Algos make money. Quants are paid millions of dollars every year to design these systems. So TA, in this case, again, has been proven to empirically work. So now we have two different examples where TA is the input to create the output, the desired output, in this case, money, actionable trades, so on and so forth. If TA was fake, so let's go the other side. If TA was fake, algos wouldn't exist. You couldn't create an algo if TA didn't exist. Because if it was truly random, then the only way you could make money is if you were truly random and you just so happened to get a consecutive series of wins, and then you stopped your bot before you started losing. So you would need to wait for a random consecutive series, a string of wins, and then that is essentially, that would be a proof, I suppose, another empirical proof that TA is fake. But because that's not the case, because it's not completely random, because there is an element of TA and self-fulfilling prophecies and so on and so forth, these algos actually make money. So because they make money, TA in this case is real. So I mentioned this before. I'm now going to go deeper into this, the self-fulfilling prophecy aspect, the self-fulfilling prophecy element that is true in the markets. So even if the markets are generally belief-based when it comes to traders' greeds and emotion, and that's really what makes the highs, that's what makes the troughs, the lows, that's what makes the point of maximum financial opportunity, what makes the point of maximum financial risk in the markets, is the human emotion and the human greed and the fear and the FOMO, so on and so forth, that drives it. And a lot of these traders, if they're looking at the same thing, they're probably going to act on that same thing. So if everyone is looking at a certain level, let's say Bitcoin $10,000, right? If that suddenly becomes the support for 6 months, every trader is going to be longing $6,000 as long as it works, right? The moment it doesn't work, every single trader who was longing that, who is a TA-based trader, is now shorting, and is now shorting it hard. If we look at what happened in Bitcoin's price action in 2018, it was tapping 6,000. Everyone was making money playing those bounces, and then the moment it went below, it never touched $6,000 ever again until it broke it back, right? So once it broke 6,000, it completely nosedived all the way down to $3,500, I think. So that means all of the traders before, they were looking at this level that was holding. They were buying on this level that was holding. But the moment that it flipped, they all started selling. Now, what about $6,000 is particularly special to Bitcoin? What is mathematically or fundamentally special about $6,000? Is this a new paradigm? I don't think so. It's really just all of these traders who are looking at the same thing and trading off of it. So there's an element of a self-fulfilling prophecy there, in that if everyone is looking at something and everyone believes that something is true, then it doesn't really matter if it's true or not. The placebo effect makes it happen and makes it real. It makes it true. And so here's another third kind of, we can call it a proof. It's not really a proof, but it's a third example of TA working. And so for those reasons, and you can't really ever, prove it for sure. We can never be 100% sure that this is a thing that's true, but we can have our general presuppositions and our guesses based upon that. So I think TA is absolutely something that's actionable. I personally am not really a TA trader, but I think it's in general, my perspective is that TA, the more that I've thought about it now, I realize that TA is really just a subset of FA, fundamental analysis. So fundamentals, if you're looking at the fundamentals of something, let's say Coke, you're interested in buying some Coca-Cola stock. So you want to do your fundamental analysis. All right, how much money has Coca-Cola made last year? How much money did they make for the past 3 years? What are their cap tables looking like? How much money are they bringing in? What are their expenses looking like? What are their future investments looking like? So based on that, we can almost make a graph. So if I made $100 last year and I made $200 this year and I made $300 the next year, based on my forecast, and I make $100 next year, $300 next year, based on my forecast, I can say, well, every single year I made $100 more. So I can probably bet with some level of certainty, with some degree of confidence, that the year after that I'm going to make $400, because clearly whatever I'm doing is working. Now, does that $400 have I made that $400 yet? No. Does it exist? No. It's something that is not real. It hasn't happened yet. But what I'm doing is I'm looking at the past performance of me or Coca-Cola, and I'm making a future prediction based off of that. What does that sound like? It sounds like TA. So TA is, even if you're looking fundamentally, if you're looking to buy an asset, you are going to look, well, why do I want to buy this asset? How have they been performing? What kind of partnerships do they have? What are they looking to build and to invest in the future? These are all data points that we look at and build a future projection based off of that. And technical analysis, in my opinion, is just one of them. So if Apple stock is $1,000 today and $20,000 tomorrow, clearly it's more attractive today than it is tomorrow. And at the $20,000 price point, it becomes something that for you don't want to buy. Nothing changed about Apple themselves. Their numbers stay the same. But now because of this crazy price rise, you now no longer want to buy. So there's an element of TA there even. So I think TA is part of fundamental analysis. They're all the same thing. Fundamental analysis is technical analysis. It's the only way that algos can work. It's the only way that traders have managed to generate alpha. It's the only way that traders have not gotten completely destroyed in many cases and gone bankrupt, because if it was random, if it was truly random, uptrends wouldn't exist, downtrends wouldn't exist, supports wouldn't exist, resistance wouldn't exist. And that's a really strange world. If you look at a random walk, if you create a chart that's just a random walk, it doesn't really look like a chart of any asset, actually. It's just kind of, it's like a sine wave almost, because it's completely random. So what chart does a sine wave? No chart does a sine wave. They either trend or they range, but when they range, they don't really range like a sine wave. They just they range either ascending triangle, descending triangle, whatever it may be. But it's never just a sine wave. If it was a sine wave, up, down, like a heartbeat, then everyone would just buy every time it's down low, and then they would sell it high. And then all of a sudden, you're creating this kind of artificial demand and so on. And then the TA guys start coming in, and they start pushing price up or down, so on and so forth. So I absolutely think TA is real, but I think TA is fundamental analysis, and that's all. So thanks for watching this video. I hope you guys enjoyed it. I'm going to be doing a daily video every single day. Please subscribe to the channel. Follow me on Twitter @PhilBeforeShow, and I'll see you guys next time.